Good afternoon and welcome. I'm Thorsten Beck. I'm the director of the Florence School of Banking and Finance at the European University Institute, and I very much welcome you to this webinar on the launch and presentation of our new ebook, Digital Finance in the EU: Drivers, Risks and Opportunities. A few words about the Florence School of Banking and Finance before I give the floor to Laura Rinaldi from DG Reform. The Florence School of Banking and Finance was founded some 8 years ago to be the bridge between practice, policy, and academia. And I think this book and the broader project of the Supervisory Digital Finance Academy kind of represents the best of this kind of bridge building between practice, policy, and academia. We are active in research, executive education, knowledge production, policy dialogue. And again, this book kind of and the projects again combines all of these different elements. Now, the financial landscape has undergone quite some changes to a large extent due to the technological innovations that we've seen. Crypto, big data, machine learning, artificial intelligence, all of these are elements that on the one hand provide huge opportunities for customers, for financial institution, competition, efficiency, also opportunities for supervisory regulatory authorities that can use them. Subtech is almost like a word that we use at the dinner table. ResTech coming up, RegTech, InsurTech. But on the other hand, digital innovation, digital finance also poses new challenges and new risks. And obviously, supervisors, regulators have to be ready for these new challenges. And in this book, and as part of the broader project, the Supervisory Digital Finance Academy, which Laura will introduce in just a moment, we published this ebook with different contribution, kind of looking at these different dimensions that are relevant at this stage. Obviously, a very fast changing world. I think also that's why an ebook is probably the appropriate medium to kind of bring across some of the current state of the art and some of the policy messages, because by next year, there might actually already be new developments and new challenges popping up. Very quickly, I want to walk through what we're going to do today. I'm going to give the word in a moment to Laura Rinaldi from the DG Reform, the funder of the Supervisory Digital Finance Academy. Then we proceed to presenting the book itself, together with my colleague Leonardo Giani, fellow Giuseppe Sciascia, who is economist at the DG Reform. Then we go to specific case studies, and then that's where the third to the fifth partner, so to say, comes in, which are these three ESAs: the European Banking Authority, the European Security Markets Authority, and the European Insurance and Occupational Pension Authorities. And after these three case studies, we have hopefully enough time for Q&A, and we will allow you to come in with questions. We will also have actually some of the authors of the different chapters joining us, so you can also ask questions directly to them. So with this again, welcome, and I give over to Laura for her welcoming remarks. Thank you.
Thank you, Thorsten, and welcome everybody also from my side. It's a pleasure and an honor to be able to launch this ebook of the EU Supervisory Digital Finance Academy, which is dedicated to the drivers, the opportunities, and the risks of the digital finance. And this is really an important milestone of this much bigger initiative that we have indeed with the Supervisory Digital Finance Academy, that we call in a short way EU-SDFA. It's an important milestone because since the academy was launched by the Commission together with the three supervisory authorities, as mentioned by Thorsten, EBA, ESMA, and EIOPA, and the Florence School of Banking and Finance 3 years ago, we have launched a lot of different initiatives, and that is an important one. But what is the overall objective of the EU Supervisory Digital Finance Academy? The objective is really to support the national financial supervisory authorities in their daily work in relation to digital finance. And this academy has been growing since its initiation a couple of years ago. It has been growing as a platform of reference for digital regulatory and in the digital and regulatory domain. This is an important achievement, not only for the European Commission as a whole, but also for all the parties involved, which I thank very much for being all on board with us. That are contributing to this initiative, and also those that are benefiting from it, in particular the member states, the national supervisory authorities. In this short introduction for the ebook presentation, I would like simply recall what is the role of DG Reform and the technical support in this initiative, and what is the structure and the objective of the Supervised Digital Finance Academy. The mission of DG Reform as Directorate of the European Commission is to provide support to the member states in designing and implementing reforms that can be structural reforms, growth enhancing reforms on specific needs they might have. And we always carry out this work through our technical support instrument, which is providing the financial resources to bring the expertise to the member states and help them in designing their reform, designing and implementing their reform needs. It is a flexible but also comprehensive tool that enables them to respond to needs that might arise in the national economies. And so it's really a tool to accompany the member states in their transformational change, also in line with EU policies. The EU Supervisory Digital Finance Academy is a very good example of the way technical support works and bring changes on the ground in the member states. Indeed, the Academy was launched to help member states' financial supervisory authorities in addressing the challenges, but also getting the opportunity, making full use of the opportunities that are brought by digitalization. And therefore, we didn't want to simply create a multi-country capacity building program, but we really wanted to create, together with the member states, a vehicle enabling the different supervisory authorities to really build a community and strengthen such a community, to learn from each other, because they are facing similar developments in their countries. What is also very important is that in this academy we cover the financial services at large, so across banking, insurance, and capital markets. So really working on strengthening the relationship between the different national competent authorities and promoting a common culture for digital finance, which is particularly important because it's really a new trend that is affecting all member states in a very similar way. Therefore, digital finance, by transforming the financial sector landscape, is actually providing evidence for an even stronger need for convergence and cooperation across member states, because indeed digital finance companies are very mobile, they can go everywhere, and they should be all treated in the same way, they should be understood in the same way. From this perspective, the supervisory authorities need to develop new skills and to invest adequate resources in fully understanding, identifying, and be able to manage all the issues that are posed by digital finance. But at the same time, we also want them to be enabled to develop tools and take full advantage from digitalization trends, to work in a more efficient and faster way. So in short, we think that digital finance is having a significant impact both on the present and the future of supervisory activity, and that we can help through the technical support. We can help the national authorities to really go the extra mile in the implementation of the regulatory framework, and also anticipate possible emerging needs that are going to come their way. So this is the reason why the European Supervisory Digital Finance Academy was created also as a flagship project in 2020. It is overall a comprehensive training program, very articulated with different set of trainings, workshops, all oriented to spread the knowledge on digital finance. And of course, it also includes an important outreach component as part of the initiative, like the one that we are presenting today with the ebook. I think in the design of the EU-SDFA, we really wanted to create spaces and occasions and opportunities to exchange and disseminate within the financial sector community, not only the supervisory world, but also the academia and the practitioners. And the occasion of today is a very good one for this purpose. So by outlining the drivers and the risks of digital finance, this book, we hope, will be a step forward in making even more visible the changes that are brought by digital finance to be able to manage them correctly. So I think I will stop here. I would like to thank all of those that contributed to the various chapters, so the authors who contributed to it, and also the editors and the organizers of the event for having achieved this result today. I look forward to the presentations as well, and thank you, the audience, for being with us. Thank you very much for your attention.
Thank you very much, Laura, for putting this ebook into the broader context of the EU-SDFA. Now let's turn to the book, and I'm going to start with my colleague Leonardo. Can you tell us a little bit about the genesis of this book, and how did we end up with the 14 chapters that we have in the book?
Yeah, thank you very much, Thorsten. And first, just let me also thank the participant to this online presentation. And secondly, but not less important, of course, many thanks to all the people involved in the development of this book, in particular to Thorsten and Giuseppe, the co-editors, to all the authors, and to, of course, DG Reform and the European Supervisory Authorities. But I will also just thank Laura Pigneri, our communication specialist at the Florence School of Banking and Finance, who coordinated the editorial side of this project. I will just say a few words as Thorsten asked about the genesis of the ebook. And well, the concept of the ebook started with a selection among some of the main topics covered in the training activities which took place during the first academic year of the EU Supervisory Digital Finance Academy, the EU-SDFA, either at the European University Institute here in Florence or in the workshop hosted at the European Supervisory Authority. In doing this selection, we faced some constraints which were somehow dependent on the multiple objectives that the ebook was aimed to pursue. So first, on the one hand, I will say that the ebook should not have resulted in a mere stock-taking exercise, meaning that it should not be only a sort of report of all the training activities held during the first academic year of the EU-SDFA. The book indeed was intended to enable past and future EU-SDFA participants to complement their learning experiences, while also providing valuable documents to rely on in the future. At the same time, however, it should have to be linked to the training activities, and this is why we asked to the authors to start from the teaching materials used in the trainings, but to substantially rework and enhance those materials, turning them into true and proper, albeit short, chapters. Secondly, on the other hand, we were also fully aware that not all the topics taught in the first academic year of the EU-SDFA could have been included in the ebook. This is why I said 1 minute ago that this was the selection among some of the main topics covered during the training activities. The ebook indeed should have to be made up of, let's say, easy to read contributions, since it was also aimed, and this is another objective of the ebook, at providing the EU-SDFA with visibility in the research and policy community by allowing experts and scholars to contribute to the public debate. So the authors were asked to keep their writings quite contained, and this excluded from the selection some topics that, although being very relevant, we considered that were, let's say, inherently less suitable to be effectively dealt with in a concise manner. Anyway, the selection of the topics included in the book would also have to cover a broad area in the vast field of digital finance. We regarded the opportunity to have contribution on a varied range of themes as something of great consequence. The challenge in this respect was to put them together in a coherent way. We agreed to group them in 3 broad sections, and this is something that Giuseppe will touch after my speech. And these 3 broad sections covered, organized the writings by gathering them under 3 labels that are also suitable to highlight 3 sets of matters. First, the overview, that is something that cannot be regarded as an easy exercise in a fast evolving field such as digital finance, as Thorsten mentioned at the beginning. Second, the technologies and drivers, and third, the risks and opportunities. So the ebook ultimately resulted in a collection of valuable contributions written by experts and scholars with assorted backgrounds who consider 14 chapters and 12 topics from a quite diverse perspectives. We hope that in doing this, the multiple objectives of the ebook have been achieved, and that it can represent an advantageous resource for both the EU-SDFA past and future participants who are looking to enhance their learning experience, as well as for anyone that is interested in the intersection between digital finance and supervision. Thank you very much again, and Thorsten, the floor is to you.
Thank you very much, Leonardo, for that. Giuseppe, drivers, risks, opportunities. How do you, can you give a little bit more meat to that? Of course, without discussing the 14 chapters in detail, which unfortunately we will not be able to do, but if you can kind of a little bit of more insights into that theme of drivers, risks, and opportunities.
Thank you, Thorsten, and good afternoon also from my side to all the participants. Very briefly, I need also to pay my due to thank everyone, and first of all, the big team that is behind the EU-SDFA. I have the pleasure of being one of the coordinators from the side of DG Reform. And I have to say that we started really from a totally blank slate 3 years ago with this idea of helping the national supervisory authorities in coping with the changes brought by digitalization. And day by day, we have worked a lot. We have been certainly busy in setting up the practical dimension of the academy, if you want. So the residential activities, the session, the engagement of the speakers, the thousands of emails we have sent to the NCAs and so on. But we have also really tried hard to not lose sight, of the substantial focal point, which is digital finance and digitalization in the financial sector that have been changing the way our financial systems and financial supervisory authorities in particular operate today. And so what we present today is indeed the result of this collective effort to shed light on this more substantial dimension of the EU-SDFA, and then on the drivers, risks, and opportunities, which is the title we have chosen for the book, that surround digital finance and digitalization in general. Now, let me start from the drivers very briefly. Of course, I cannot provide a comprehensive view on what are the drivers that we have observed today in the evolution of digital finance, also considering that this is really a moving target. So probably the drivers that we were observing 2 years ago when we started the project and we started working on the EU-SDFA might not be the drivers that we observe today in the market, and not the same that move at the moment the supervisory authorities. Drivers, as we know, are the inputs, the motivations behind human and natural phenomena, the behavior that can be observed. Now it is difficult to identify a common set of drivers that explain the spread of digitalization in the financial system. But we have tried to do this in the ebook. And one element that I think is quite interesting is considering the changes that are affecting the demand and the supply of financial services, but also that are affecting the demand and supply of financial regulation and supervision. So how these are changing in this respect. And I have to say that after the long and challenging years of the global financial crisis, the spread of digital technologies applications has provoked, as was mentioned before, 3 core transformations that we try to highlight in the book. One is the impact on the new products, service and business models, not always subject to regulation and supervision, with then controversial effects on the markets and an impact on the way households and corporates manage their money, their finances. At the same time, digitalization has really changed the mechanics of intermediation and distribution of traditional products and services, creating new forms of interaction between households, businesses, and financial services providers. And third, and this is another element that we try to highlight in the book, there has been a new wave of automation in the activities of financial market participants, not only financial institutions, but also really how investors deal with their finance and consumers as well. And this has increased the level of speed in financial intermediation. This is something that, for example, the contribution of Professor Angeloni highlights very well. So there is also probably another important driver that should not be underestimated, and it still links to the global financial crisis, which is the lack of trust in the financial sector. As we know, the global financial crisis has changed a bit the perception of the public towards the financial institutions, and this has probably triggered a quest for alternatives to traditional channels of intermediation. And this, again, is something we explore in the text. And then we have the data. Everything about digital finance in the end is about data. This is an element we explore in the book, especially through the case studies. And this is what really is unique to digital finance and financial digitalization, creating a feedback loop between data products, services, and activities. Now, what are the consequences in terms of risks and opportunities? This is the typical distinction that we observe in the policymaking and supervisory narrative around digitalization. And of course, in this ebook, we could not depart from this sort of a mantra, looking at the risks and looking at the opportunities. We know that digitalization brings new risks in the sense that there are under a qualitative and quantitative dimension, we see new risks. Some of these risks arise from the capacity of financial market participants to exploit at full the potential of digitalization, often, unfortunately, to the detriment of their counterparts. And this is something that supervisory authorities and regulators, first of all, need to be aware of. On the other hand, digitalization transforms existing risks, for example, by making some of them more prominent or linked to different drivers, or by reducing some of them, so creating in turn positive opportunities. So again, we have a sort of a feedback loop. Now, risks and opportunities develop on 2 dimensions then, and this is also an aspect we explore in the book. On the one hand, we have an impact at a micro level, but then we also observe how risks and opportunities reverberate with effects at a macro level, so on their impact on financial markets in general, making then their governance particularly challenging for policymakers and supervisory authorities, as we observe in the work of the academy. So one pressing question remains for us, and is the same that probably we had a few years ago. That is, how best should we balance risks and opportunities by not losing sight of the drivers of digital finance? And we have tried little by little in this ebook, and we are trying to do it in the work of the Academy to help authorities finding an answer to this question. But I know we have just scratched a bit the surface of the different challenges that surround digital finance. And so I cannot but look forward continuing our work with the partners, the beneficiary authorities, and all of you ahead. Thank you very much for your attention, and back to you, Thorsten.
Thank you very much, Giuseppe. I want to just spend a few minutes myself on two topics. The first one is crypto. The excellent chapter by Thorsten Keppel, the other Thorsten now school, as a kind of an example how things can change actually quite a lot from the initial idea. So crypto, or decentralized finance, as it sometimes was referred to, or the Bitcoin blockchain, was originally kind of developed with this libertarian idea that we have to move away from a centralized financial system, which is built on a central authority and on trust. And so the idea was basically to replace the central authority, to replace trust by consensus protocol. But as Thorsten points out, or lays out very nicely, there's of course also a downside. There's the lack of scalability, even though it's very secure. But there's also, of course, the risk of cyber attacks or of loss of theft in the Bitcoin arena. And interestingly enough, the decentralized system has become quite centralized, because if you now want to buy Bitcoin or any of the other cryptocurrencies, you probably will go to a kind of a platform or an exchange, which then actually deals in the Bitcoin or in other cryptocurrencies. And at the same time, though it was kind of a libertarian idea of a free for all, it has become a quite concentrated market. And rather than staying separate from the traditional financial system, there are also attempts to kind of link to the traditional financial system through things like stablecoins, which are kind of, yes, a bridge to the traditional financial system, being backed, for example, by fiat currencies or by enabling a stable exchange rate between kind of fiat money and cryptocurrencies. So this is an area where there's, of course, also in the regulatory side, the supervisory side, there's a lot going on. There is, of course, lots of very different opinions, such as let them burn down, let them burn out, or try to regulate them, an important debate. But of course, there's also for supervisors an issue in terms of being clear what kind of risks the crypto world might constitute for the traditional financial system. Are there any spillover effects? I mean, we've had for a long time the debate on non-bank financial intermediation, also previously referred to as shadow banking, which often brings crisis into the financial system, into the banking system. And similarly, of course, the crypto world has to be watched, even though at this stage it doesn't seem to be a major risk factor. The other kind of chapter I want to very briefly refer to, and again, I'm not trying to pick winners here or so. I mean, they're all excellent chapters, but it's again an area that's also for me for personal interest now. It's the one by Paolo Giudici on AI. There's, by the way, also another chapter by two colleagues from the Dutch Central Bank on a more practical case. AI, artificial intelligence, so that we basically replace human intelligence with a computer algorithm, is becoming increasingly important, of course, also for in the regulatory world and legislative world, in Brussels, for example. And of course, now people are waking up to both the opportunities. Well, we kind of know there are lots of opportunities, but also increasingly becoming aware of the risks. And so in a chapter by Paolo, for example, there's he develops like a certain test or a certain metrics that can be used to assess artificial intelligence, including the sustainability, resilience, accuracy in terms of predictive power, fairness, not having biases, which is a big issue with computer algorithm. I mean, we shouldn't have any naive illusion that just by trusting a computer can move away from any biases. And finally, explainability, which I think is I see as a very critical point, because we want to understand what is going on. We don't want to be like the guys on the spaceship with HAL 9000, which then suddenly took over, and the two humans that were left, they didn't quite know what was going on with them. So again, artificial intelligence, lots of opportunities. Also, like somebody who's not an author of any chapter, John Danielson from LSE has pointed out, can be very useful for micro problems, for macro problems, which are much more complex and which are also much more unknowns. It might actually be much more difficult to use. But again, a space to be watched. And with this, I kind of want to finish this part of the presentation of the webinar, and I would like next turn to the 3 case studies and ask my colleagues to be very quick, very to the point, so we have time for questions and answers in the last session. And by the way, I want to point out to the audience that you can post questions, please, in the Q&A box, not in the chat. So first, I'm going to Maha Abbasi from the European Banking Association. Please, over to you.
Thank you. So the European Banking Authority, just to specify. Maybe first, I would like to give you a bit of an idea of how European Supervisory Authorities contribute to the SDFA, so specifically for the workshop. The ESA has organized 3 workshops in the first training cycle, 1 workshop per ESA. And the objective of these workshops was to cover digital finance supervisory practices and specifically to promote peer exchanges between supervisors and to cover both the supervision of innovative financial products and services, but also the use of advanced technologies for supervision purposes. So the first academy year, we had a SupTech workshop organized by ESMA, so supervisory technology. EIOPA organized a workshop on digital business models, and EBA organized a workshop on regulatory technology, RegTech. So just to explain, RegTech means any range of applications of technology-enabled innovation for regulatory compliance and reporting requirements implemented by regulated institutions, and this with or without the assistance of a RegTech provider. So our workshop focused on the challenges and opportunities of RegTech applications in the areas of reporting and anti-money laundering. And I would like to give you a flavor of the discussions in these workshops by presenting the use case that is shared in the ebook. So the use case shared is about a solution for transaction monitoring that involved several banks pooling their encrypted business customer transaction data to identify, with the help of a RegTech provider, patterns and networks that would not have been visible to any single bank without this pooling. So if some transactions are flagged afterwards based on this, the relevant bank investigates accordingly. Here, just to highlight also that these banks remained responsible for the monitoring transaction and for the business relationships with their customers, and that the pool data was restricted to the parts specifically relevant to transaction monitoring. So this example actually did set the stage for discussion about the benefits and challenges of data sharing and collaboration in the context of anti-money laundering more generally. And we gathered views, so what different parties thought. So of course, we can see here that this specific data collaboration example can improve detection of financial crime and provide access to new insights. So because different parties have small bits and pieces of the bigger picture, by joining these bits and pieces, you see new patterns and you make sense of the data in a larger context. But on the other hand, it was also acknowledged that there are still data protection, confidentiality issues to be investigated. There are potential consequences on the business relationship between the bank and the customer as well to be figured out and clarified. The topic is quite complex. I would not go into all the details of it. Of course, I encourage you to read the ebook chapters to go further into details of these matters. But it seemed relevant to give full consideration to alternative technologies and governance options that are available. And I think it's sensible to create further awareness of uses and of limitations of different privacy-enhancing techniques and collaborative analytics, secure computation techniques among supervisors, so that we can build together a better picture or a full picture and have better understanding of these matters. So with that, I hope you have a sense of how discussions go in these workshops, and that is encourage you to contribute to these workshops and to assist to them. And over to you, Giulio.
Thank you very much, Maha, for this. Now let's go to Giulio from ESMA.
Yeah, thanks a lot, Thorsten, and thank you, Maha. So the use case I am presenting was part of ESMA's workshop on SupTech that took place last year in April. We chose to include this the use case in the ebook because we found that it is a nice example of how natural language processing and text processing techniques can be useful technologies to supervisors, even starting from relatively simple and accessible tools developed in-house that can become part of every supervisor's analytical toolbox, let's say. So to showcase how what can concretely be done with these tools, this part of the workshop built on a project where we used the NLP to analyze securities prospectuses in order to address whether issuers respect some provisions of the prospectus regulation and identify some themes, some patterns which potentially warrant closer monitoring by supervisors. So concretely, the workshop illustrated how we analyzed a database of over 3,000 prospectuses, which are often lengthy documents of hundreds of pages. So overall, this project analyzed something like 600,000 pages of text, of financial documentation, which allowed us to study questions that obviously would be difficult to answer otherwise. The workshop was a combination of more technical data science tools so how to actually implement these tools, including, let's say, bit snippets of code that were illustrated and discussed with participants, but also some example of how to then use the information that we extracted and in a way that is useful to address some questions for supervisors and policymakers in this area. So to give you some examples, among the aspects addressed, we first covered how to calculate the length of these documents, check the language used in these documents, whether multiple languages are used in a document, which actually involves a few relatively simple technical steps. It's not something extremely sophisticated. Then we shifted to some more, let's say, maybe elaborated aspects. We checked the presence of some required sentences in the disclosure. We checked the complexity of the overall language, the complexity and the diversity of the language used, leveraging some linguistic measures from the literature. Then the project turned to identifying the risks that are discussed that are laid out by the issuer in the prospectus. So the risks related to the financial instrument. We showed how these tools allowed us to find, for example, one example is we found a number of cases where different issuers use boilerplate language, so very similar language to describe some risks, which might raise some questions, for instance, with respect to the informativeness of financial disclosures in some cases. So this was just an example of how natural language processing can provide policy-relevant insights and how it concretely opens up new possibilities for supporting supervisory assessments, for instance, by allowing the detection of anomalies in a more systematic ways, which then supervisors can prioritize for manual in-depth inspection. So with this, I would conclude the brief outline of the use case and hand back to Thorsten. You are muted, Thorsten.
Thank you very much for this. So thank you, Giulio, for this very insightful and concise discussion on NLP. Andres, last but certainly not least, before you start talking, let me just mention again, any questions, please post them in the Q&A box. Andres, over to you.
Thank you, Thorsten. Hello, good afternoon from my side as well. So indeed, for the Q&A session, I will briefly outline EIOPA's use case that we discussed in our workshop. And as it was already stated, it was related to digital business model analysis, and more concretely, we focused on an open insurance use case. So open finance discussion around that have been taking place for quite some time, mainly related to the banking side so far, PSD2 type of developments in Europe, but beyond Europe as well. We don't have any compulsory data sharing requirement in insurance side, but of course, many business models are appearing along the same lines. And more recently, we of course have the proposal from Commission on financial data access, or shortly FIDA proposal, which ultimately aims to create a broader data access right beyond banking, covering also, for example, pension sector, but also insurance sector. And I guess these developments have increased the need to better understand open finance in insurance context as well, or open insurance development. And hence we decided to focus in our workshop one concrete open insurance use case to facilitate a bit better understanding on potential implications for consumers, but also supervisory community and for the market. And the use case was related to insurance dashboards. So basically, a tool which aims to collect and show for you as a consumer a holistic overview of your insurance situation. You can imagine it as a sort of digital interface giving you an overview of the different policies, what is included in the coverage, what is not included, exclusions, so on. And in a way, it might also help to compare different products, or facilitate also switching depending on how you designed it. And in a way, it will be a tool to help consumers, because insurance in a way is highly complex. So in a way, it will help consumers to, or might help consumers to better understand his risk situation, potential gaps. If you think about the case study or use case, then of course it includes exploring different aspects, such as potential rules and responsibilities of different players, existing legal framework, potential gaps, implementation part, standardization part, but also concrete risks and benefits, of course. So it was highlighted by the participants in the workshop that it's of course this data sharing should happen in a transparent and safe way, taking into account the European values. But it should be also clear for consumers what they are consenting to, avoid information overload and so on. So really different aspects that were covered there. We looked also, as I already mentioned, risks and benefits. And here some are very obvious, like data protection, security issues, ICT related risks, potential discrimination if you have more data available and you can granularly exclude certain consumers, but also, of course, benefit side, so it can facilitate more informed decision making, more tailored products and services for consumers, facilitate maybe also competition and efficiencies we concluded the discussion around this use case that in the broader sense, open insurance developments might lead to the benefits for consumers, but of course the risks that I highlighted should be also kept in mind, and hence it's important to develop to monitor these developments and emerging risks and think about potential regulatory adjustments where needed, and I guess this is what we continue to do. With that one, I give it back to you, Thorsten. Thank you.
Thank you very much, Andres, for that. So I think this gave you a nice, hopefully our audience, a very nice overview of the different themes that we touched upon in this ebook, and of course also in terms of specific elements, specific dimension, and also specific use cases that have been discussed over the last year, and therefore also more insights into the broader topic of the EU-SDFA. So as you can see, all of us, the speakers, have become somewhat smaller because we are being joined now by several of the authors of some of the chapters. And I do actually have the first question I find here. Whenever I say people should post in the Q&A box, they go straight to the chat. But anyway, it doesn't matter. Paolo, this is, I think, actually a very good question for you. How can I find more information so we can effectively measure the risks arising from the use of advanced AI models when they are proprietary model developed in-house and might be black boxes? How can we understand the level of inherent risks and biases? Can I kick this over to you, Paolo, to give us some insights on that?
Sure, Thorsten. Thank you, and good afternoon to all. I'm very glad and honored to be here with you. Indeed, this question would require maybe some days or hours to answer, but I'll try to be brief. What we put in the paper, in the book, the paper that is in the book, is the idea of measuring the risks of AI by comparing essentially the output of the AI with the output that should be. It is either the truth or the opinion of the expert. So the idea is to compare the two using a tool that derives from measurement of inequality in income, the Florence curve. So the idea is to compare the two curves using the Gini coefficient, which is related to the area under the curve idea. So this provides a metric that is a number between 0 and 1. The higher, the better the accuracy. So a value close to 1 means that the AI model is very accurate. Close to 0.5 means that it's just as a random model. And this idea is extended to the other criteria in the AI Act. For example, robustness. We compare the curve of that correspond to the output of the predicted model with the curve that we have with a model that is perturbed by cyber attacks. So we get a number, again, between 0 and 1. The higher the robustness, which means security and safety also. We do a similar thing for fairness, comparing the output under different population groups, men, women, or country X, country Y, country Z. If the curves, again, are same, then there is fairness, otherwise there is not. And similar for explainability is a bit more complex, because explainability is not just, we say a model is explainable when we can find drivers. I mean, I don't want to say causes, but drivers, factors that affect the answers. So a model is explainable when we find at least one factor that is relevant, but there could be more. So we do this work variable by variable, and this may take longer computation, but by the end of the day, we get for each variable a measure, let's say, how that is explainable, again, with a number between 0 and 1. So this to say that with the work that we put in the book and that we've been discussing through, the many sessions that we have had at the SDFA in Florence, with the different, regulators that were present. By the end of the day, we provide metrics that are, relatively easy to understand, number between 0 and 1, that can have a statistical test that can tell whether the values are significant or not, and that are now implemented in a Python package that we have sent to the participant of the previous advanced course last week. So all of this can be reproduced using a GitHub package. It's called Safe AI package, can be easily found, and so this is not just theoretical work, but also something that can be applied. Of course, to conclude this very long, talk of mine, I would like to say that clearly the work is in progress because we have measured, we have these 4 metrics, but others are needed from the AI Act, for example, for privacy, for human oversight, and so on, and also for human rights impact assessment. So it's work in progress that, however, we are building together with you and through the SDFA. I hope I was clear, but I'm always available for questions.
Thank you. No, thank you very much for this, Paolo. I mean, there's a follow-up question here specifically on fairness and whether AI can help reduce biases, discrimination, or might actually introduce it. I mean, I have a certain view on that, which is that, I mean, ultimately AI does not function independently from humans because we give them the starting point, but I think you can probably give a much better technical answer than I do.
Sure. Well, the answer is that AI can measure, whether there is fairness or not. It can measure the unfairness of AI, but also of humans. Yeah. So AI can provide a measure. Then, however, it's up to the humans to decide whether that measurement is lead to, an answer that is fair or that is not fair. Just to give you an example, if we find that there is a difference in the credit score, let's say estimated probability of default between men and women, that difference is, 10%. Well, let's say 10% is a bit too high, 10 basis points of difference. Then we have to decide, is that fair or is not fair? So, but this to say that AI can measure, but is not free of unfairness like humans.
Yes. Thank you for that. I have actually 2 more logistical questions, and the first one I have to give to Laura. Sorry if you have to break the bad news, but there's a question for non-EU countries, including accession countries, which are currently not part of the SDFA.
Thank you for the question. Unfortunately, at the moment, we are not able to include non-EU countries in the Supervisory Digital Finance Academy. It's nice to see that there is demand and interest. It's not the first time we hear it. We are considering extending the program after its 3 years completion, and we might consider what are the possibilities for doing that in the future, but unfortunately at the moment this is not possible.
Thank you. And maybe I can follow up on this. There's the other question from Lorraine about different outputs. I mean, this is the first ebook. I think it won't be the last ebook. And we're thinking about new formats. We're also thinking, the SDFA is not just about teaching or producing output or like knowledge production, but also about interactions, creating a community. And I think there also the participants of the different courses will certainly be more than welcome to also participate in future dialogues and in future ebooks like this one. Now, actually, I see that Valentina is also here online. So if I may very briefly, Valentina from ESMA, you've co-authored a very interesting chapter on subtech, which is relatively new, a new phenomenon, but it has been used. I mean, actually, it's all just the other day, a paper that showed that subtech actually has been quite successfully used in Brazil, of all countries, in the context of bank supervision. Can you just say a couple of words of how it has been used in Europe, and has it been successful? Have you seen success cases of that?
Thank you, Thorsten. I'm trying to turn on my camera, and apologies, I'm not succeeding, or maybe. So yes, indeed, in the chapter on subtech, it's also the chapter which followed actually the workshop that ESMA organized in the framework, in the context of SDFA. So it's, this chapter is based on all the exchanges we had. As you just mentioned, it's not only about knowledge production, but it's exchanges within this community. So in this chapter, we described that subtech is a concept which actually is more and more in the uptake because all the supervisors do want to apply themselves technologies, because there is a need for this, there is demand, because there is data, unstructured data. And we provided examples in this chapter. As Maha said, of course, I invite everyone to read this piece of ebook. So yeah, we at all the three ESAs, and well, with examples from ESMA in this case, we provided a few examples of how we used NLP tools for our activities. But this chapter is probably a broader, well, overview of not only how we use it and how we actually aim to use it and what are the challenges. So it's also a call for regulators to and for the community, I mean also for market participants, to improve on data, how actually the data is published. Well, they call for these machine readable criteria. So we said that these are a lot of opportunities, also a lot of challenges. And yeah, we concluded that it's of course, well, subtech with the data and with all the opportunities it creates, it's being developed, and we not only use it, but we also aim to create this supervisory convergence and actually share among supervisors this knowledge. And this SDFA is exactly the opportunity and the forum where these codes, well, let's be specific, codes can be shared.
Thank you very much, Valentina. So it's certainly a space to be watched. Let me see. They have 2 minutes left. If there are any from my fellow panelists, are there any additional remarks? Anybody wants to pick up on a specific theme or topic? So I don't see any more questions. If not, then I first of all like to thank everybody, all the panelists. I'd like to thank also, of course, the three ESAs for their great cooperation in this ebook, but of course also in the broader EU-SDFA. Special thanks to Laura and the DG Reform for making this all possible, and of course to my colleagues here in Florence, Leonardo Giani, Laura Pinieri, our communication expert, and everybody else who has contributed to the success of this book. Thank you for you guys, the audience, for listening in, for watching in, and for asking interesting and important questions. And yes, so we have the SDFA also a website. I'm not sure, Jan, whether we can maybe just list the website here in the chat before we all disconnect. But if not, you can also get it through it, I think, from the FBFA. Oh, there it is. Yes, very easy, as EU-SDFA.eui.eu. You can see also other products. I think we have a couple of very nice videos. So again, it's not just about training. It is about research. It's about knowledge production. And I very much hope to keep in touch with you. Thank you, everybody, for joining us, and have a very good afternoon and evening.